Morning, Matt. George Salamis, President and CEO of Integra Resources, now a gold producer with one mining operation in northern Nevada and two development level projects. I'm here actually reporting to you from Washington, D.C., where we're pushing forward on the Delamar project, which is our largest gold project in the development stage.
Surprised you can get a hotel room in DC at the moment. Pretty
Indeed,
busy.
indeed it is. Indeed it is. It's a hive
Yeah,
of activity for sure.
it really is. It sounds like the US government's kind of keen to kind of get this drilling going and seems very supportive of mining. Is that what you're hearing?
Indeed, every meeting that we've had so far has been. I mean, in my 7 years of coming here to kind of push on various permitting initiatives, I've never seen this kind of level of. We want to move permitting forward. We want to move mine production forward in the U.S. I mean, levels of support that are being kind of offered on that front we've never seen before.
May you get your own executive order, George. May you get your own. Right. But let's talk about today's news. Obviously, announced 10,000 meters worth of drilling. When he gives the headlines, and I'll kind of dive into some questions I'm keen to ask you.
For sure. Not long after the acquisition, we're merely 5 months and a bit of change into the acquisition, where we've hit the ground running with an exploration program. Based on the fact that in our due diligence before we acquired Florida Canyon, we spotted a lot of low-hanging fruit, I'm going to call it, in terms of exploration upside potential, both at the mine site itself and on the kind of the regional tenement that they Florida Canyon owns and we own. And so the starting place for us is the mine site itself. And really the objective here is two things: take 10,000 meters, hit the ground hard around the mine site itself, looking for extensions of existing mineralization in an effort to add mine life, in an effort to grow the resource and reserve base. Once we finish that, we're going to move on to the regional aspect of exploration. But I mean, just the message here is pretty simple. This is just the starting point for us here. Really?
Right. Well, okay. It's the starting point. So I'm intrigued as to kind of thinking, how you've gone about deciding, quite frankly, target prioritizations, because you're talking about historical dumps, interpit zones, lateral in-pit extensions, etc. So it's a little bit of everything, it seems. So can you talk about what specific criteria the technical team used to prioritize these targets?
Yeah, for sure. And I should say, I mean, this is a mine site, exploration and mining team that's been really chomping at the bit to get going on exploration, but really hasn't had the green light to do it under previous ownership. And so they have a program that's been defined for years, and we looked
Okay.
at it and we vetted it, and it looked very sound to us. And basically, I mean, it's three phases. It's things such as mine dumps of material that have been put to one side or used to backfill open pits that may have not have made the cutoff grade in the past at lower gold prices, but now could be feed for future heap leaching. And it's there. It's been mined already. It's been blasted. No need to blast it. You just simply we can either take it and run it through the crusher, bring it to the heap leach pad, or bring it straight to the heap leach pad, one or the other. And so the effort there is to kind of define, volumes and grade of this low grade material. Not unlike the Delamar stockpiles, for example, which we talked about for a number of years, that were sitting there on surface. Again, didn't make the cutoff grade under the Kinross, decades of production. But now that we're A, at higher gold prices, and B, we're looking at this as a heap leach project, makes sense to look at this low hanging fruit. That's focal point number one of the program. Second piece, which is I think we've talked about in other webinars that we've done with you, Matt, is the ridge and saddles between these open pits, right? If I was to categorize, mining at Florida Canyon over the better part of the last 25 years, is a series of ice cream scoops in different parts of a very large mineralized system. There are saddles and ridges in between these small open pits that are clearly mineralized, that indicate that there are drill intercepts, not enough drilling to make a resource or reserve. So we're hitting these areas, these ridges and saddles, in an effort to start connecting up some of these ore bodies. Maybe there's, instead of 6 or 7 small open pits, maybe there's two or three larger pits to be made here. That's the
Right.
focus.
And okay, can we just jump back to the kind of the assumed cutoff grades versus expected grades in a higher price gold environment in a crop across the three drill zones? Obviously, you said that the guys have had a bit of time to think about this, but they will have adjusted their thinking next. Can you sort of maybe look at talk about the cutoff grade specifically?
Sure. So, I mean, this is a mine that is kind of historically, well, actually for the better part of the last 20 years, has been operating in a $1,000 to $1,200 gold price environment. Now that with the gold price doing what it is, we can afford the luxury of looking at lower cutoff grades, lower average grade materials. So this, by our indications, some of this material sort of grades in the 0.25 to 0.3 range, whereas the run of mine grades or the ore grades that are being crushed are in the sort of 0.3 to 0.35, albeit low grades, right? Let's be clear here. Both of those grade ranges are low, but with an established operation now, you can now afford to look at some of this lower grade material because there's a potential for it to be really economic at this stage, and we won't know until we drill.
Right. And why RC?
RC's quick, it's fast, it gets you a good sample. At that mine site, the beauty of drilling at a mine site, which we haven't done for a number of years. I certainly in my career I haven't done it for a number of years. Done it before, but all the infrastructure is there. It's easy to move an RC rig around a mine site, which is why the costs of drilling are certainly lower than sort of your regular exploration project in Nevada because of that.
Okay, and with the kind of the dump material, what assumptions are you making about the kind of gold recoveries by the heap leach?
Well, that's one thing that's to be determined, Matt. We're collecting material for the purposes of doing bottle roll testing for doing gold testing, right? But we've got a good idea that this material it does leach because it's a lot like the in situ mineralization, which is there. But just how well it leaches is yet to be determined.
Right, and so will you also then be able to kind of work out the kind of differences between the dump materials metallurgy compared to the current feed in terms of permeability, in terms of cyanide solubility, those sorts of things? All that's to come, is it?
Yes, indeed. Yeah, that's part of the program is to collect sample media to do that kind of test work.
Okay. What about any sort of block modeling updates or planned or? What do we know about how you're going to get out of this?
Yeah, this program and the other programs to come are all designed to kind of feed into a new resource estimate to be done sometime towards the end of this year or perhaps the first quarter of next year. We have an expectation that through this drilling and through increases in the gold prices in the modeling of resources and reserves, that alone should add some mine life, yet to be determined. The expectation is maybe a year or two, maybe. But that makes a big difference. So instead of 6 years, 6.5 years of mine life, we're possibly looking at 8 or 9. Who knows? We have to do this work.
Okay, and with that modeling, is there any difference between the modeling for historic material versus fresh ore? Is it all the same?
It's modeled very differently. I mean, the fresh ore has a geological constraint to it, right? It's constrained by structure, it's constrained by lithology, versus this low grade stockpile or dump material, if you will, doesn't have a geological constraint because it's been blasted, mined, moved, etc. So there's nothing constraining it. So it's a bit tricky when it comes to modeling dump material that's already been mined and moved versus geological material that has geological constraints to it, if that makes sense.
Okay. And in terms of just help people sort of understand the nuances of it when you're doing sort of lower grade material, in terms of your desire to kind of convert inferred to indicated or resource to reserve, when you start sort of targeting that, and how much effort you put in at this stage.
Well, so this first foray into drilling, again, it's drilling that hasn't been done for a very long time. Everybody's really excited at the mine site, but this first approach with 10,000 meters is, again, just the start. Once we get the results back from that, we'll be able to hone into areas where we can say clearly, hey, there's continuity between this pit and this pit. We've proven it with this drilling. We have to get back in there and do some more infill drilling to bring this from a resource to reserve potentially. There'll be more work to be done there. But the beauty of having a mining operation that's cash flowing means we don't have to keep coming back to the market to finance these multiple drill programs that we have planned. It's all self-funding.
Right, and obviously you're producer now, gold producer, new gold producer in the US. You've got to kind of report things differently. People are looking for different things from you, but also in terms of your planning, you've got to think differently in terms of, I don't know, things like, life of mine strip ratio and operating cost per ounce or whatever it is that you tell the guys internally you need to focus in on to give you the information. They're going, do your lobbying or do your pitching to the institutional boys and girls. So how are you finding that kind of data gathering exercise? How's it work?
Yeah,
Intrigued.
it's laborious. It's
Yeah.
5 or 6 key studies that we're doing, exploration just kind of being one of them, that will add to the portrait of what Florida Canyon could be. So, for example, drilling is a major part of that. Resource expansion is a major part of that, but that's not the story alone in of itself. There is geotechnical drilling which is to be done here, which might prove or disprove that we can get a little bit more aggressive on things like pit slope angles. And if we can do that, we can, change the strip ratio, mine less waste, mine more ore efficiently, have more fleet availability to take ore to the leach pad, which is always a good thing to have in the context of open pit mining. And that's just one of, as I said, 5 or 6 studies, which are happening through the course of this year. Busy times for the mine staff, but again, music to their ears, because this sort of thing hasn't been looked at for decades.
So how do you go about sort of driving a program to a sort of an aggressive production ramp up? Because that's the name of the game. I know this exercise you're going through is the first of or just the beginning of the kind of the drilling, the expansion stuff. But in terms of increasing those ounces, where's that come from? Does things like upgraded classification data help you? I don't know. Does it enhance some kind of short-term mine planning? I mean, what are the kind of quick wins?
Yeah, well, so that's interesting because we've just gone through this exercise, Matt, in terms of capital allocation. Now that we're cash flowing, and we're cash flowing with, let's understand, with more cash available to the corporation, to the mine site, than we believed we would have when we acquired the mine. And so we know we've sat down with the entire executive team and all the VPs and said, okay, amongst these 6 or 7 buckets, which ones of these will have the most material effect on adding value to the mine site? Is it exploration? Is it geotechnical drilling? Is it mine sequencing improvements? And so consider it's a number of dials. If you dial this one up, what is it going to do to the overall value and net present value? Let's just say, for example, or cost margins. If I dial this one up a bit more, what's that going to do? What's the sum total of all of these dials that I'm going to have available to us? We have available to us, going to do to value? And we've just gone through that. It's a brilliant. It was great exercise to have, and so we've really prioritized things that will have the best impact. Exploration, which we've announced this morning, is clearly a pretty significant one.
Yeah, no, it's interesting. And but if I look at the headline is 10,000 meters of drilling. That sounds fantastic. But the cost is not significant. It's like $1.5 million. So see, I mean, in terms of bang for buck, it's great, but you must have done a little bit more work on the kind of return on investment in terms of ounces per drilling dollar than me going, it sounds cheap. What's your expectations?
Well, yeah, think about it this way. I mean, our exploration team, again, part of the exercise of capital allocation, we had to make a decision because, again, we've got healthier exploration budgets than we've had in years due to cash flow. And, the no-brainer element of this was what ounces provide the quickest, best value to the company in the short term, and that's mine site exploration, right? Drilling on extension for something that you plan to mine, imminently, versus going out to Delamar or Wildcat, which are great exploration targets, but finding an ounce out there is much different from finding an ounce at Florida Canyon at that mine site. So the expectation to your question is, adding mine life, we think another 2 years at a minimum beyond what we have there is very doable. Very doable.
Okay. Well, look, you're in DC, which I think which is interesting. But your current or the existing permitted boundary program. Sorry, I say that your current program is within the existing permitted boundary, right? What are you looking to try and do there with that? Is it again, does it come back to this accelerating the kind of resource to reserve conversion or mine plan amendments, or what is it?
Yeah, so the first step to the exploration that we announced this morning is really to stay within the permitted mine plan boundary, right? And anything that we find within there can get added to a mine plan fairly quickly without sort of time consuming, onerous permitting requirements. Step two is to start looking out further afield outside of that mine plan, and this is a company, Florida Canyon, that owns a very large tract of land, both north and south of the mine site proper itself. And what we've seen is there's been an effort by various owners over the better part of 25 years in fits and starts to do a bit of exploration, in that entire trend, which goes on for, 10 kilometers plus. But they would drill, and then, of course, budget constraints, low gold prices, for whatever reason, they would stop. And so there were bits and pieces of information in this entire district that we're now starting to compile and put together. The other thing that we've done, and kudos to our exploration department for identifying this, there have been no fewer than 4 exploration managers at that site over the last 20 odd years, who all have a different idea of where to find the next big ore body on that regional package. So rather than recreate the wheel ourselves, we're bringing all of these former VPs of exploration of these various companies who worked out on site together in one room, and we're just going to throw darts at the wall. What was your thinking at that time when you were running this project as to where to find the next big ore body out there? And we're going to get compiling all that data, and second half of this year, that's when we're going to start testing some of these targets.
Okay, so just on that, okay, this is just the start. This is phase one, but looking at the market, looking at this kind of what you're DC now, and they're encouraging, I guess, permitting process, people, mining companies to get on with the process. So it's a great environment which to operate, but you've got to decide what's going to be right for you in terms of the market, ultimately, in terms of what the next phase is, and how much is greenfield versus how much is resource increase, etc. So how do you view that? How do you come at those discussions?
Yeah, I take a lot of feedback, I guess, Matt, from my shareholder base. Clearly, as we've discussed in other webinars, we now have a class of investor who looks squarely at production, cash flow, margins, that sort of thing. They're very happy to see we had a $61 million treasury that we've added to through gold production, which is great. Best treasury we've had ever, and they're focused on that. Then we have another class of shareholder who, yes, they like that, but they also like the exploration, the fact that we're bringing a bit of exploration sizzle, if you will, back to our story, and the fact that adding mine life, for example, can have a real tangible near-term effect to NAV, right? Versus something that, hey, we've got to wait 3 years to permit this, and then it's another year and a half to build, and the time frames associated with that. They like that exploration aspect to doing what we're doing at the mine site. So yeah, I'm taking a lot of cues from shareholders these days on capital allocation.
Okay. Well, look, appreciate it. It's a quick one, because I know you're at a hotel and you're dashing off into more meetings, which is great to hear. Seems like a very positive environment for gold out there. Is that understood by government, actually, or is this just mining or is it specifically gold that they're taking their cues from?
Well, so in these meetings that we're having in DC, the thematic is all the same. This administration wants to move quickly on mine production, mine permitting. They're very supportive. When they talk about metals and those being critical metals, gold is part of that strategy. Gold is squarely, in and amongst what they view as a critical metal to be produced in the U.S., which is again music to our ears. Again, I've never.
You were telling me something quite interesting, George, before we started, and I don't think I'm talking out of school here, but some of your conversations talking about the energy and how you're dealing with the energy requirements, and you had someone suggest to you a different form of energy that you could be tapping into, which kind of surprised me. Tell us about that.
Yeah, yeah. So interesting conversation, and this is, again, unprecedented. We've never had this type of conversation before with the federal regulators, which is, when the question is asked, how do we plan to power the Delamar site during our ramp up to production? And the answer is, power line upgrades, a little bit of on-site power generation, and all of these things cost money and they take time. And then what's floated by some of the federal regulators is, well, have you considered SMRs, small modular nuclear reactors on site? And this is something that I've been a proponent of for decades. I mean, if there's something that's going to, crack the nut of powering remote mine sites, it's small modular reactors. And so I shake my head and I say, well, while that would be great, we've been told 5 to 7 years of permitting at a minimum to get something that looks like a small reactor on the back of a flatbed truck to power your site. And their answer to me is, well, how about a year or two instead of 5 to 7 years? And of course, I nod. Well, that would be excellent. But it would be a game changer. But again, this all speaks to their desire to go faster on mine production in the U.S.
It also says problem solving to me.
Oh, no kidding. No kidding.
Right?
Yeah.
It's different. It's different times. Different times. I'm liking what I'm hearing. Well, George, good luck with the drilling. Fantastic. Good luck with your meetings over there in DC. We'll see you soon. Okay.
Matt, thanks very much.